JB here, March 28th, 8:57 on this fine Friday, the last Friday of March. Talk quick about the market, some names I'm looking at, go from there. S&P futures are in the red, not too bad. Well, I mean, Nasdaq's futures down 0.5%, S&P futures down about 0.4%. They were down already going into PCE data, which we just got, or a little while ago. The PCE data came in kind of almost in line, and it's so far in a month, it's almost like a backward-looking number. So we're at the end of March, and it's February data. The personal income numbers came in better than expected, but it's pretty much flat. It's like a pancake. The big data pieces are going to be next month. I mean, it's going to be like a whirlwind of catalysts, right? So today and then Monday, the last two trading sessions of March and the first quarter. I don't know if there'll be any shenanigans or window dressing or what have you. And then we'll head into April, and then the earnings season, and we'll start to see some of the ramifications of possibly what's going on. I mean, the more you read, you see people posting charts about all this these transactions and stuff happening before the tariffs hit, and all these crazy anomalies in what shipping and all these other charts that people don't ever look at, but now we're looking at, I guess, because of the tariffs. So we'll have to see how this all plays out. But next week is certainly going to be volatile. And I thought Wednesday's sell off that could have been next Wednesday, right? When tariffs really kick off. But I think that also on the flip side, I mean, if there's expectations are high for some disruption and it's not as crazy, that maybe there's upside surprises too. So I'm open to both sides scenario today. I mean, I'd be really concerned if the SPY doesn't hold 563 here and we close under 563. The S&P's up. It was up last week. It's trying to make back-to-back weekly gains. It's up 0.5% here, so we're almost pretty much red on the week at the open. So hopefully you can find some footing here. And I always try and find the silver linings. And if you look at the VIX, you wouldn't think we're at the cusp of slipping back, possibly correction territory, and then into bear market territory. It just doesn't. The VIX isn't flashing that. Everything else is, right. I was talking about yesterday. It's like the market is. There's so many headwinds with in regards to the tariffs, the inflation, geopolitical tensions, what's going on with the government, and jobs being lost there. What does that look like? What's the jobs report next month? I mean, there's so many different moving parts, and most of them you can skew as bearish, right? I mean, you can skew as negative for the market, for the consumer, and all that stuff. And then the VIX is kind of like saying, maybe not, right? But I guess time will tell. The next shoe to drop is going to be the U.S. debt downgrade, right? Those headlines now are already starting. The U.S. not going to be able to pay its debt somewhere in July to October, which, I mean, U.S. always pays its debts, right? I mean, it's never default on its debts either. But I mean, this can has been kicked down the road so many times over the years. It's like I guess one of these times it doesn't get kicked, but needless to say, I always try to have a glass half full kind of look in the market, because I mean, over time you look, the market always typically goes up, but then there's going to be times when the market does pull, and that's when you can make some serious coins. So always, I'm open to both sides right now. I keep saying I don't have my bear or bull suit on. I mean, today would be an ideal scenario if we can do what we did yesterday, rally at the open and then hold those gains would be nice, and get over the 200-day moving average. That doesn't happen, then yeah, a little tricky here. Also, the amount of stock trading over there, 200-day on the S&P, still trending up. It was down a little bit yesterday, so I keep watching that because maybe an opportunity there. All right, so that's kind of overall markets. Individual names first. I mean, some crazy stuff after the close yesterday. The announcement that Trevor Milton's been pardoned. I mean, I'm not going to try and get into a political tirade or rant in regards to that, but it's like there's people who've been put in prison for much, much less, right? So, I mean, a lot of folks who've done these Ponzi schemes, that's crazy, right? They take money, promise, but then instead of using it to do what they said they're going to do, take the money and pocket themselves. Trevor Milton, in view of the public, lied time after time after time after time, and then created a company out of nothing and enriched himself based on the lies, right? So, and then even when he knew he was lying, he continued to lie. And even to this day, he gets on and he does his little speeches now on I guess they X'd his Twitter account, so now we had to restart it, and he still says he didn't lie about the truck rolling downhill or all the other things that went on. It's like mind-boggling to me. But anyway, to me, it's like a knock on transparency and the markets and all that stuff. You can't have a publicly traded company and then have all those controls in place, the audits, and then have someone who blatantly lied about the company, and not be some repercussions and ramifications. And not only that, to the point where they enrich themselves based on the lies, right? So I was my stomach dropped yesterday when I saw that. I'm like, I don't wish harm on anybody, but at the same token, that person created harm for lots of people based on lies, right? So, all right, rants for other days. So GameStop first, and was it 22.40 here earlier? Just dropped in. They priced their offering. I actually don't see the numbers. I have to go look. But Peter Schiff of the gold fame, he's opting in on GameStop. I was mentioning yesterday that the people are saying that because of this $1.3 billion offering, the people who get the convertible debt are going to convertible notes are going to short the stock, which doesn't make sense unless you think it's bankrupt, right? To me, I think it's a lot of folks who look into the MicroStrategy and think this is like the mini me, and they're shorting it based on the same premises that they thought MicroStrategy was a short, right? And so, needless to say, what it's done, the premiums are still elevated even on the call side. So yesterday, so I had already locked in the 35, so 100%. I held those, went and rolled. I mean, I sold those, went and rolled them in the 40s. Those were holding up at the open, and then even at the lows of the day, I mean, they almost got cut in half at times, but then they were back up almost. They were down like 20%. So, which leads me to believe I think this is going to remain volatile, and I think at some point it's going to reverse course. So I was looking at the May strikes. Premiums are still wacky. I don't want to be in a spot where I'm waiting for it to break out. So I'm going to wait for some strength, and then I think there's a name that could trade 35.40 in the coming weeks and months, regardless of what the market does, pending Bitcoin, right? So if Bitcoin tanks at some point, obviously there'll be some concern there. But I mean, not only that, if they just continue to raise capital with the convertibles, hold the $4.7 billion in cash and use that as interest income. I mean, you start looking at this, and they could do some financial shenanigans. I mean, good ones, right? And then if you look at someone that it's almost like GameStop is now as a bet on Ryan Cohen, and I mean, history is a great indicator that he's very good at returning shareholder value and creating companies and creating value. So I mean, I think it's a good bet, but again, I'm not loading the boat. I'm not going all in. I'm just like I always do. I'm just gonna take some shots at it. I'll probably look to get some more strikes. Maybe not today, depending on what it does. But if it does find footing next week, don't be surprised if I add some May strikes. All right, so that's GameStop. BIDU was looking great yesterday, roaring out of the gate all the way up to 99. I went and got some strikes to next week. It turned around in the 98s for pretty much the rest of the day. Then China markets, Asian markets sold off overnight. You have China ADR selling off this morning. So still like this one into next week. I still think it trades 110 plus in the coming weeks. Not sure I'll add anything here today unless we get a bounce. Uh, if the market SPY starts going 567, 568, maybe I'll look for some more strikes, but I'll hold on to those. Dell also had relative strength yesterday, especially in the afternoon. I mean, the stock was down under 95 by 2 o'clock, and then it just embarked on a $4 rally all the way up to 98 and change. Gave back some of the gains, and the close still closed up over 1%. I think I have the wrong chart up here. Oh, well. Why do anyway, so still like Dell here. I was almost looking at the 105s yesterday. I passed. I think they were like 35 cents. Again, similar, if the market finds footing, I'm not going to go and chase names right now, but if it does look like we're going to find some support at 563 on a SPY, I'll look to get some strikes there. And Restoration Hardware, here's a name that's just been absolutely obliterated. And then yesterday, you would think with the market a little remaining volatile, and some of these tariff names getting hit, you would think RH would be a name that got hit again, and it didn't. It was flat. So certainly, I mean, one of these days it's going to break out. I did the spec calls last Friday. Again, if the market finds footing here today, I'll be looking possibly to do some spec lottos. The premiums are nuts to try and trade that on anything outside of like Thursday or Friday option expiration. That's Restoration Hardware. And then on the flip side, trying to find names to do hedges, right? So I've been looking at the financials, and if you look at what would be like kind of like the bellwether of the consumer confidence and retail sector as a whole, which does 60% of the US GDP, it'd be like a name like Visa and MasterCard, which responsible for all those transactions, right? So I mean, it's not like uh, cash as an instrument to do transactions is not as prevalent as it used to be. So if you're looking for signs of the economy, I mean, Visa, MasterCard will be front and center. And then you have the consumer confidence data out, and you're like, how are these names not taking it on the chin, right? And then you take a look at some of these retail ETFs and some of these names. I mean, Lululemon's an example this morning. Uh, just tough. Target most recently to Walmart guidance. So I mean, to me, this is another like glass half full kind of scenario. You look at a name like Visa, and up another nearly 2% yesterday. Still holding the 50-day moving items. Not saying I'm ruling out getting puts. Like if the poop hits the fan, I was talking about getting the poop hit the fan puts. I mean, I don't know if that's gonna be a scenario at some point, but you can't rule any of that out. I'll be watching that, but it's like similar to the VIX, almost like a sign like, okay, maybe things aren't as bad or aren't gonna be as bad as what's being put out there. But if things are as bad, so in lieu of trying to force trades, right? It doesn't make sense just because I think Visa should be taking a hit and it's not, to just keep getting puts until it does. SQQ, some of these ETFs. So if you've traded back in the day, I mean, ETFs and stuff were still kind of like a novelty, right? They weren't out there as much, but now there's ETFs for everything. But back in the day, 3-time bear ETFs were kind of still somewhat of a novelty. And in 2008, 2009, they were like the most insane moves you've ever seen on stocks. The ETF, some of these, and that's why if you see me trade SKF, SRS, FAS, those names existed back in the day, and those names went from $15, $20 up to $300, $400, $500, $600 in a very short period of time. They went parabolic once the markets really start to roll. Not saying we get a scenario like that, but the more, as things progress over the next couple of days and weeks, especially with the tariff situation, I may just look, instead of, in lieu of trying to chase some of these names, and some of these names have already sold off quite a bit, I might start looking at a name like SQQ, right? Well, SQQQ, and my QQQ, 3 Qs, right? Let me put that in there. It's down here in the 30s, and I'm not saying, I would get some crazy calls on it, but it's one of those names. I mean, if the Nasdaq takes the next leg to the downside, just a name, it's 30 and change right now. It could be 70 in a couple of weeks. So crazy as that sounds, but don't the bad analogy or whatever, take the market takes the stairs up, elevator down. But if it takes a serious elevator down, like a non-stop elevator, these are some of the names that maybe I'll look at as not only obviously to make some profits, but then to offset some other positions. I think that's it here, folks. SPY 565. Just hold 563 here. If things get nuts at noon hour, I'll be back on audio. Let's have a great day. Rock and roll.